Tesla and Elon Musk. What a combination, I must say. This company has had quite the rise since COVID and has continued to impress further and further. Obviously, with Elon purchasing Twitter and that whole thing that's going on, the stock price has taken a little bit of a tumble. And by a little bit, I mean 71%. Trading from a high of nearly $399 in January of this year. It is now ending the year closer to $112. Now that is certainly a cause for concern, but there is a lot of things that people aren't seeing, such as, the financial health of the company, future growth prospects. There's so much. And when you look at news articles, it seems to be extreme fear-mongering, to say the least. Obviously, with Elon shifting over to Twitter, that whole thing is just carrying on as is. There's problems in the Chinese market and many other things. But today, I want to just go through the entire stock. We'll have a look at everything, see what Tesla offers, and by the end, you can make your own judgment on the stock, of course. I personally bought Tesla stock back in 2020. I think it was near the end of the year. I remember selling it just before it hit its peak in 2021, and I re-entered about November time, so about $182 I entered back in it, and I've lost about 30% since then. At least I haven't actually checked on it today, but that was only one single share I bought back into. I am definitely looking at this dip and thinking to myself, this could possibly, for me, be an opportunity. But let's jump into it. Tesla is the world's largest EV manufacturer, electrical vehicles. They offer quite a range, to say the least. But one thing that has always attracted me to them, despite not paying a dividend, and that's why it's strange in this channel to have such a stock, but I wanted to branch out and just do general stock reviews. Let's jump right into it. Okay, so over on Simply Wall Street, Tesla has the ticker symbol TSLA. Traded on the NASDAQ, it has a price currently of $112.71 as of the 29th of December 2022. Market cap $355 billion, a far cry from the trillion that it was at no less than a year ago, down 68%. Their Snowflake tells us a very interesting story. Value, they score 3 out of 6, but for future past performance and general financial health, they score a whopping 6 out of 6, which is something I don't think I've seen any other company score 6 out of 6 in all these metrics on Simply Wall Street. Of course, they score 0 out of 6 in dividend because you can't score anything if you do not pay one. Now, it's not to say in the future they mightn't become a dividend payer. That would be a really interesting turning point. At the moment, I think they're using all their free cash flow to obviously reinvest in the business and keep growth going. They develop, design, manufacture, lease electric vehicles and energy generation and storage systems. The storage systems is a really crucial point to this stock and one of the main reasons I really like Tesla and why I would almost favour them myself over renewable energy stocks and funds. Because of these storage systems, renewable energy has the issue of when demand goes up for power, sometimes the likes of wind and solar can't meet that need immediately. But the storage systems that Tesla's rolling out, mainly their mega power their mega packs, are one of the main reasons I'm so intrigued by this stock. Right. Now, let's look at some of the good things. So, on a discounted cash flow model, they're currently trading 30% below their fair value. Earnings are forecast to grow 21%, and they grew over 222% over the past year. Now, there has been significant insider selling as Elon has been selling stocks in order to fund his Twitter buyout. Now, let's carry on down. You can see plenty of news has happened, and the Techno King of Tesla, which is the official name Elon calls himself, has sold numerous amounts of stock, nearly at $4 billion a time. Now, we can see they employ nearly 100,000 employees, and they were founded in 2003 by Elon himself. We can see it has a payout ratio of, or PE ratio of 31.8, and their last reported earnings was September 30th, 2022. We can see that they made a revenue of $74.8 billion. They had a cost of revenue of 54.9, giving them a gross profit margin of 26.6%. Now, when you take out other expenses, their earnings netted them a 15% net profit margin. Definitely not bad. When it comes to valuation, they score 3 out of 6. Let's go and see. Against other peers, they are on a 31.8 times on price to earnings ratio. The likes of Toyota, General Motors and Ford are obviously significantly less than Tesla. We can go on down to see on the discounted cash flow model, their current price of 112 and their fair value is 161, which again is nowhere near the $400 they were trading at 12 months previously, showing this model can somewhat not be 100% accurate, but it is something to definitely consider. We'll be having a look at Tesla's intrinsic value later in the video. Analysts are in agreement. It appears that it will hopefully have a bit of a bounce back within the next year, but of course that will remain to be seen. Future growth, 6 out of 6. They absolutely smash all targets here. 21.6% forecasted annual growth. I always say in any other video, take all these forecasts with a grain of salt. You know, they are obviously predictions, but certainly if they're anything to go by, year on year, Tesla are going to explode in terms of all their production ramping up across all their gigafactories. Obviously, the slowdown in China is going to definitely have an effect, and we'll have to be monitoring that going forward. So it's definitely a stock that's always on my watch list and will continue to be. Their free cash flow sits at $8.9 billion, so and that's been increasing. They actually only became profitable, I believe, back in 2020. Prior to that, they were not profitable at all. Well, closing in on it anyway. Let's go down to past performance. 82% annual earnings growth. That's insane. We can see here back as far as 2018, they were making a loss of $2.7 billion. Elon did say the Model 3 was going to make or break Tesla, and they appear to have come out the other end, certainly. Now, the Twitter thing is obviously a wrench in the whole system of things that hopefully will play out quite well into the future. But again, that remains to be seen and is something to bear in mind. Let's go down to financial health. We can see Tesla again smashing out of the park with 6 out of 6. In the short term, they have $36 billion in assets to $24.6 billion in short-term liabilities. When it comes to long term, it's $38 billion to a measly $8 billion. Again, some numbers we rarely see. We can go over here and see that they have a 5.8% debt equity ratio, equity of $41 billion, debt of 2.3. But hold on there. When we include their cash and equivalents, they have $21 billion in cash and equivalents to $2.4 billion in debt. So they've far more cash than total debt, and their debt is well covered by operating cash flow, 668%. On a 234 times coverage in interest payments. Again, numbers I have never really seen in any other company. Let's go down and see their dividend, and it scores 0 out of 6. Industry average sits at 2.4 for the audio industry. It remains to be seen. There is a high possibility into the future as Tesla matures as a company that a dividend may be something they pay out. They certainly have a lot of free cash flow, and it could be something on the table for long-term holders. They're obviously they'd be happy if that is the case. When we go down to management, you can see Elon sits at a tenure of almost 19 years, obviously serving as their CEO from the early days of Tesla. When we go down here, we can see that the techno king of Tesla and the master of coin, Zachary John Kirkhorn, are very unique positions, to say the least. I loved reading the article when he legally changed that from CEO. That's pretty neat, to say the least. All of their leadership team and board members are considered extremely experienced, with average tenures of nearly 7 years on the board. When it comes to ownership and recent insider transactions, we can see clearly that Elon has been on a major sell-off at all sorts of prices. He's been selling at $330 all the way down to the $197 and more recently $174. So he definitely sold before it hit its current price of $112. Will he be selling more? That remains to be seen. I think that's almost him and what he's selling. And despite all this selling off, he still maintains a 14 or a 13.4% ownership stake, meaning he's still the largest shareholder by a good margin. Institutions own 44%, general public at 40%, and Elon and Larry Ellison sit at 14.9% combined. We can see underneath Elon is Vanguard, BlackRock, and State Street in a very nice row. They combine to own about 14% combined. So almost at Elon Musk's level, and plenty of other people are invested. There's Legal & General also sitting at 0.5. Now, Tesla currently employ upwards of 100,000 employees. Back in 2016, 2015, they only had 13,000. Again, another massive rise. Right. Let's jump over to their website and see all the products that Tesla offer. It's good to understand what sort of company they are. The Model Y is an SUV-style vehicle that they've just started rolling out many of their gigafactories. The Model 3 is their sort of claim to fame, the claim to the mass market, a car that was a lot more affordable than many other EVs. Their Model X is more of Model S is the next one. It's more of the sporty car. S probably standing more for the sport side of things. They have their Model X, which again is a much bigger version of the Model Y. A much bigger SUV. It probably is a true SUV, to say the least. They've got their solar panels and their solar roof, which again, once rolled out into the future, I think will be a massive boon to the company. They also have their accessories, but we're moving on to one of my favourite aspects of Tesla themselves, the Mega Pack. Now, this is massive energy storage, and they've rolled it out in several places. I think they've at least rolled it out in Australia with these massive battery farms, battery packs, Mega Packs, and they can store quite a lot of energy, and this would be perfect for the likes of places with more unreliable energy grids. And I do believe going forward, Mega Packs will play a massive, massive part of Tesla's growth into the future, as well as they're also rolling out Optimus, the robot. That's another really key feature. All right, let's move on to their intrinsic value and have a wee look at that. Over here on Alpha Spread, we can have a wee look at the intrinsic value of Tesla. At a base case, they are considered at $118. I'm actually kind of surprised. I thought the number would be a little bit higher than that. Best case is $226. Now, we do know that Tesla has blown that number out of the water for several years now, so again, it's just another model. It combines discounted cash flow that we use on Simply Wall Street and the relative value model together, and it gives you an average, and that is just one of the many models that you can use to look at a stock. Now, with all obviously the ongoing issues from the likes of China, Elon buying Twitter, their stock has definitely had a bit of a decline, a major decline. Going down 70% in the last year is definitely no small feat. Now, where will it bottom out? That remains to be seen, and who knows really the answer to that. For me personally, I do see it as an opportunity for my own portfolio, and I will be buying some shares in Tesla moving forward. And I have high hopes for them in the long run for myself. So, let me know your thoughts on Tesla as a stock in the comments section below. Do you think in the future they'll even pay out a dividend? That'd be quite interesting. Anywho, I hope you've enjoyed the episode, and I'll see you all in the next one. Thank you.